Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 12th of July. Starting off with the FTSE 100, which is making bold attempts at cracking that 8,300 area. There's a line, I think, there from the end of May. That's today's high, 82.76. We need an end-of-day close above that to then give us the June peak, 83.71. On the downside, hoping that we won't have to go lower than the floor of that rising trend channel from October, 81.60. Worst case at the moment is that we hit that May support line projection, 80.65. RSI in the low 50s. It's been blocked there actually for quite some time now, since the end of May, which is a slight red flag, but hopefully we can get the break through the 82.76 level and through RSI 55, which seems to be the block at the moment. Moving on to the DAX, and here the picture is one of also trying to get through a line from couple of months back. The line there now around 18,650, so we want an end-of-day close above that. We had an end-of-day close above a rising 50-day line yesterday, which obviously we had before earlier in the month, and that failed. But ideally, this is the one, and we break through that 18,600 zone and then head up to retest the best levels of the year, 18,900. Obviously, the big picture here is trying to get up to the 19,000 or 20,000 area, in fact, at the top of that channel from back in September. Downside hopefully limited to 18,000, whatever happens. RSI through the 55 level. So in this case, we've actually had a breakthrough the 55 level. Maybe the FTSE will copy that and head higher too. Dow is next, and here we've had, we're trying to get through to that 40,000 level. Hopefully we'll do that in the next session or two. Top of the channel there, heading for 41,900, which we're maybe hoping for by the end of next month. So the Dow looking like the strongest of the three indices we look at here, and obviously we've been above the 50-day line almost continuously since the 18th of June, which is also a plus. The downside hopefully limited here to 39,000 now at the floor of that channel from back in the end of July last year. Might get a slip down to the 38,300 level, but hopefully we are up and away on this market. Bitcoin is next, and this is the difficult one at the moment. Obviously had a failure at that resistance line there from March. Currently the 200-day line providing the block, even though we've had bullish divergence, a bear trap rebound for this market, but failing just at the old June low there near 58,600. So basically we want to be back above 60,000, which I suppose is the psychological level as well. Then that would pencil in the 50-day line, 64,500. Worst case at the moment is that we have to retest February support there just above 50,000, but a bit early to say whether that will be the level or the February support line projection there at 53,500. But while the RSI remains below neutral 50, there's always a risk of this market rolling over a little bit further. Moving on to the stocks, and starting off with the stock on the Aquis market, because somebody has to look at this market. And here, EDX, we had our initial target there around 8 pence. We came back and basically found support above the rising 200-day line. That's 7.5 pence, which is encouraging. The next target here, while we're above that 200-day line, is 13 pence, hopefully later this month, at a which is basically a 2-year resistance line projection for the stock. On to Emmerson, where I think things are looking quite encouraging. We've had a gap off the low. It's a bear trap gap reversal, bear trap from below the old 1.8 pence support there from January and April. We're also broken above the 50 and 200-day line, so maybe this is the time when we head up to the top of that channel there from August last year, as high as 3.3 pence, and looking for this market to do that, or the stock to do that, by the end of next month or even sooner. But the key here, staying above 1.8, whatever happens. On to one of this week's rises, well, earlier in the week, and interviewed the company as well. Here we've got Goldstone. We've got a V-shaped bull flag, which is very encouraging, and looking for the stock to clear the 200-day line at 1.9 pence, and then that would hopefully then open up the old June 2023 gap at 2.9 pence later this month. But the key here is to stay above the 50-day line, 1.25 pence. In fact, we found support basically at the at the bottom of the gap there from March around the 1.1 pence level, which is a good sign. But that V-shaped turnaround suggests that there's a decent second wind to the Goldstone rally or recovery. Onto a stock which doesn't get much airtime, but here it is today with good energy, and here we've got this rising trend channel, top of the channel there, £3.26, which we're looking for hopefully over the next couple of weeks. In fact, really, the idea would be that we would hit that line there at 365 by the end of next month, while we remain above recent resistance at £2.82. You can see that we cleared yesterday we had an end of day close above a rising 200-day line, so that tends to be a leading indicator on the upside, and we've got an extended uptrend line in the RSI window as well, which is also good for the cause. It's similar to the one that we had at a Bacta before that took off. Onto a stock which I was not going to look at, but here we have, because it looks like it's rather illiquid, but at least for the sake of completeness, i-nexus, we've got the shares nearly up to the initial target there, 5.5p, which is the top of a rising trend channel from March last year. Next level up, maybe by the end of next month, if everything goes well, is up to 9p, the upper parallel of that rising trend channel. And we're looking for that while we remain on the right side of the 4p area, maybe hopefully even 4.5p would cover any retracements. On to one of the stars of the show of the recent past, which is Mosman, and here, after our target there at 0.69 or 0.70, can't remember exactly which one it was, let's say above 0.069 at least, we're looking for 0.085, and ideally that happens by the end of this month, and maybe we'll get much more than that. This looks like a very strong situation. Obviously we've got that one-day wonder spike there at almost that 0.085 level, but want the shares to stay on the right side of 0.07, which hopefully they can easily achieve. Another stock from Aquis, and it is looking good. Mush, the old Mush I think it was, otherwise known as Oscillate. Here you can see that we've had a decent build-up, obviously a very slow one, so this is not an overnight sensation. August trend channel from last year, and basically looking for the shares to hit the top of the channel, which I'm just about to try and draw, which should be towards the 1.4p zone over the next, well, I suppose at least next month. So maybe by the end of next month we're up at 1.4p, and after the latest breakout through 0.8p resistance, but obviously we want to close above 0.8 this week and head up to 1.4 in coming months. Only back below the 50-day line now at 0.62, really delaying the upside scenario. The stock that's done us proud in the recent past is Northcoders, and here almost continuously blue candles there, only one actually letting the side down, but our original target here was £2.30, and we're looking for the upper parallel of that rising trend channel from August last year, as high as £3.80 by the end of next month. Obviously that would be the highs for the shares since they came to market, so looking good there, and a very bold recovery there after that bear trap gap reversal and the unfilled gap to the upside. Textbook situation there on Northcoders. On to Optibiotix, where I see somebody on Twitter feels that the shares may be mentioned in the papers, which is obviously very exciting. But even with or without that, we've got the shares with the bear trap rebound from below 17p above that. I said, I think yesterday, shares are looking for 26p. If you're a fan of the shares and looking for greater glory, then that would be the line that I'm drawing now, which is heading for 31p. That's the top of a triangle there from back in November. But the key here, holding above recent resistance, ideally above 19p, and especially above the 50-day line, which is rising now, and that is backing the move to the upside. I want to go for more early bird situations, even though that is obviously sort of feels more risky. But here we've got a bear trap rebound for Pantheon, just narrowly trading under 20p. Bit of bullish divergence there as well, so lower low there for July, but higher RSI trace. So looking for the shares to bounce up back to the 27p area, the area of the 200-day line. Looks a bit like the Union Jack chart there for that stock. On to one of, well, I suppose it's a favourite of mine for some reason. The reason is that we've got that beautiful V-shaped bull flag there. Unfilled gap to the upside. In fact, we have had two unfilled gaps to the upside in the recent past. Golden cross last week as well between the 50 and 200-day lines, and looking for the shares to head up towards 3.2p by the end of this month. The way things are going, they might be able to do that by the end of next week. So very encouraging there indeed at the moment. Systems 1 is next, and here unfilled gaps to the upside all the way up, almost the perfect chart really. We hit our initial target there, 685, which is the top of that rising trend channel from September, and now we're looking for greater glory up to as high as £9, maybe by the end of next month. The way things are going, could even be by the end of this month. So very interesting situation. Market cap still under 100 million there, but it looks like it's making the transition from being a small cap to a mid cap. Finishing off with the aforementioned Union Jack, and here we've got the situation that we had an unfilled gap to the upside. We broke the high of that gap day, and the longer we stay above 18 pence, the greater the chance of a move to 21 pence, and then hopefully by the end of next month up to 26 pence. But early days yet, and maybe one has to be a little bit patient on that particular situation. Just forgot to add in Graft Polymer earlier in this sequence. Here we've had a neckline break there around the 0.17 level. Above that, we've been looking for the 50-day line there at 0.35. Obviously, after that, it's the 200-day moving average, which we failed at. Well, we had a bull trap through at the turn of May, June. So looking for the shares to repeat. That's a spike towards that 200-day line. But ideally, obviously, we stay above 0.17 while we're doing that. Bullish divergence helping and starting off the rally, and hopefully that will continue. That's it for me today. More updates over the weekend.